session of day one of the Growthpoint Investor Showcase. This session will be a business update on Globalworth by Dimitri Raptis, the CEO, and Stamatis Sapkas, the Deputy CIO. It will be a presentation over the next 20 to 30 minutes, followed by a Q&A. Just some housekeeping issues, again, which I'll continue to highlight during the day. Please remain on mute and ensure your video is off. And the Q&A will be at the end, and you're welcome to post your question using the chat box function, raise your hand function, or directly email me, and I'll run through those during the Q&A session. Thank you very much. Over to you, Dimitri. Just let me know when to change slides.
Sure. Good morning, everyone. Thank you for joining this company update. Let me start a little bit first before going to the company specific update with an overall market update. What has happened, I guess, over the last 12 months, which has been challenging for everyone around the world as a result of the COVID-19 pandemic. So as far as we are concerned, in our markets, starting from the overall pandemic, let's say, review, pretty much following patterns that we see around the world. So we have had various peaks and troughs along the way. Our markets, Poland and Romania, fared fairly well for most part of last year as a result of some very strict lockdown measures. Things opened up earlier this year, especially as soon as the vaccines became more widely available, and we're looking pretty good throughout the summer and then the early part of September. Unfortunately, however, and the situation has worsened quite a lot in the last, I would say, month and a half, 2 months. With cases rising exponentially, as well as fatalities and hospitalizations. Unfortunately, the main reason for that is that unfortunately this is mainly in Romania. The vaccination rate is very low. It's actually the second lowest in the European Union, around 30%. Poland is doing a little bit better, but still not good enough. Is around 50%, and the situation keeps, unfortunately, worsening as we speak. We hope that with this, things as they unfold, the ones that are not vaccinated will be, let's say, much more incentivized to go and get their first and second vaccine dose. Now, in terms of the overall market, real estate market, the situation, and in particular offices, which is, as you know, the main focus of our company, the overall pandemic situation has had an overall impact in the leasing demand, mainly as a result of the fact that tenants and most of our tenants in our portfolio are large multinationals. They're still, or they have been for most of this past period, struggling to figure out their future occupational needs, and trying to solve this puzzle or dilemma between working from office and working from home. It is clear that that as far as the multinationals are concerned, and their executives, top management, country managers, and the like, are very much keen to incentivize their employees to return to the office because they have seen productivity dropping. There is still certain resistance from certain employees. I should say also as a result of the fact that many of them have become used to this, working from home, and they like this sort of, flexible working arrangements. Having said all that, and we will, of course, we will go through during the presentation, and you will see it. We will the impact on our business has been rather limited. This is as a result of the excellent portfolio of properties we have. And as well as the very hands-on asset management approach we have with our internal team of more than 200 people looking after our portfolio and our company in Poland and in Romania. So jumping on the presentation and on slide 2. This is basically, you will see where we are today, or I guess as of the first half of the year, which is, our latest published information. We have a portfolio of a little over 3 billion euros, which is more or less constant over the period. It has increased a little bit. With around 1.3 million square meters of standing GLA in 66 standing assets. Our occupancy is close to 90%, 89%, with around 5 years of WALT. Very important that we have that during this period we have maintained a very disciplined approach in terms of our financing policy. We have a conservative LTV of below or around 40%, which is consistent with our investment grade credit rating from all 3 rating agencies. And also we have purposely kept very high levels of cash, around 450, close to 500 million, throughout this period, providing a lot of comfort to our to the rating agencies and the investors that we have a lot of cushion. In terms of our future debt repayment capabilities. I should also highlight upfront something which is of course public information. The change in our shareholding structure, which has evolved over the last I should say 18 months. Last year. There was a sale from our from the founder of the company, Yannis Apalekas, to CPI Property Group, which then subsequently bought additional shares, and they reached close to a 30% stake. And this year, back in the summer, CPI Property Group teamed up with Aroundtown. Which back then was the 3rd largest shareholder with around 21%, and through a joint venture vehicle, they launched a public offer for the company, as a result of which they now jointly control Globalworth with a circa 61% stake. The next slide 3 gives you a little bit more information on the split and characteristics of our portfolio between the different countries. We still have the majority of our assets in Poland, which has also helped a lot from a credit rating perspective, given that Poland generally it fares much better compared to Romania, and is also perceived as a better investor perception, especially among bond investors and rating agencies. Going now to slides 5 and 6, just a little bit of the highlights of what we have been doing so far this year. Generally, we have been very prudent and selective in our investment program, conserving cash during, let's say, the hard lockdowns and the huge uncertainty of last year, especially, but also being very selective going forward as to what type of investments we want to do. So we have done a couple of small acquisitions, strengthening our Romanian logistics platform, totaling close to 20 million euros. And of course, further investing in our development program, which again is mostly focused on our Romanian logistics platform. We have had on the asset management and leasing side, we'll have a lot more details going forward. We have had from a volume perspective, we have had the busiest, let's say, leasing semester ever, with close to 200,000 square meters of leasing transactions in the first 6 months of this year. This is a little below the third of our portfolio. This and it constitutes a circa 70% increase compared to the first part to the first half of last year. 60% of that activity related to lease renewals with our existing tenants. The remaining was new leases or expansions. We have had a drop in occupancy of about 2.4% compared to the year end. This is basically attributable to two factors. One is the challenging market conditions, but this is 1.3%, and the rest is basically attributed to the fact that we have delivered standing properties, which their occupancy is lower than the group average. Very important at the bottom of this page to also highlight that we have done exceptionally well in the collections of invoiced rent. Our rate has remained exceptionally high at ranging between 97 to 99% during this period, and this is a testament of our business model. And the fact that basically we have internalized, the property management and asset management functions. Going over to the next slide, as I said before, we have maintained the investment credit rating from all three agencies. We have abundant liquidity with close to 462 million euros, with another 200 million over 200 million in undrawn credit facilities. At the same time, we have not stopped in investing and strengthening our green credentials. This is very important. Especially these days, there's a lot of let's say demand from tenants and from investors to keep pushing and keep increasing the green footprint and our green properties. So this is what we have been doing so far, and at the same time also have been very active in the CSR space as well, which is also very important for us. In terms of for the operating and financial performance, The NOI for the first half was about 9%, 9.5% lower compared to the first half of last year, which again, it was the best. The first half of 2020 was the best semester we have ever achieved in the history of the company. So basically, this result we consider to be satisfactory and quite defensive in the face of the challenges as a result of the global pandemic. And also, quite importantly, we have maintained our, of course, our dividend policy of 90% of EPRA earnings. And during this period, we paid the second interim dividend for 2020 of 15 cents per share, while on August 31st, we announced the first interim dividend for 2021, also at 15 cents per share. Going over to the next slide. Yeah, this is what I mentioned before about the new acquisitions and the developments. Acquisition side were very, let's say, prudent and conservative. Just acquiring 2 small logistics properties leased for 15 years at a yield of around 8.5% to fully leased to German industrial companies. In terms of our development program, again, this is very focused predominantly on the logistics sector, which is as you know, globally is booming, and we're taking advantage of this in the in Romania, where we have a pretty solid platform with around 300 million euros of worth of value. On the office side, the main highlight is that we delivered our latest project, Globalworth Square, adding close to 30,000 square meters of Class A office space in our portfolio. And I think with this development, for now, we're not on the office side, we're not looking to further develop any other office properties. We're just waiting to see what will happen in terms of the market dynamics. Okay, the next, because I'm also conscious of time, the next few slides, 8, 9, 10 go and 11 go into much more detail on the operating performance and the highlights I just gave before. Maybe I will then pass the words to my colleague Stamatis, who can give a very brief update on our sustainable development over this period. Stamati? Yeah.
Yeah. So on the sustainable development front, it's something that we focus particularly on, as Dimitris mentioned earlier.
Which slide would you like me to go on?
Slide 11. The majority of our portfolio is in BREEAM very good or higher properties. Overall, we have invested directly or improved the certification in 57 properties, and we have over 2.7 billion in green certified properties. That accounts for more than 90% of our standing properties. In addition, I think what's important to mention here is that we have 2 properties which are currently under refurbishment, extensive refurbishment. That the way that we are doing this processing has allowed us to maintain our green certification, which is a testament to our our ability to develop or extensively refurbish properties without really impacting their footprint. In addition, we not just invest in green properties, but also try to identify new ways to improve the performance of existing and new properties and using new technologies. And we are very active on this front and exploring different opportunities through the use of photovoltaic parks or other means, geothermal energy and the likes. In addition to that, this year in Poland and in Romania, we're proud to say that 100% of our properties are using energy from renewable sources, and that's another initiative that we've taken to this front. In addition to green buildings and so on, and moving to the next slide, we remain very committed to our communities, supporting and in the period between June and January and June 2021, we gave about €500,000 into 10 causes, and over the pandemic outbreak, that amount increased to about 2 million, the majority of which has been to hospitals, to initiatives to fight against COVID. And finally, on the reporting part, we issue an annual sustainable development report. We issued our inaugural green bond report on the back of our green bond, which was issued in July 2020, as well as the Globalworth Foundation summarizes all its initiatives in its first annual report. And of course, it's worth mentioning that we received a few awards from EPRA in this effort.
Okay. In terms of capital markets, what I want to focus, which are basically slides 17 onwards and 18, is again, I mentioned before the change in the shareholding structure. Slide 17 shows the shareholder register as it stands today. Effectively, we have three, well, I guess two main shareholders, which is Zyciono Enterprises, the joint venture between CPI and Aroundtown, and of course Growthpoint, between them controlling over 90%, 91 and 2% of the company, with a balance being held by Oak Hill Advisors, the US hedge fund, with a little over 5%, and effectively the free float is less than 5%. So I wouldn't consider looking at the share price performance. Since the offer was made, at €7 back in the summer. But since then, since our stock is held very tightly, I don't think it makes a lot of sense to comment on the share price performance. Just a couple of words for those of you who are not familiar with CPI and Aroundtown. CPI is the largest commercial and residential listed company in the Czech Republic, with also substantial portfolio investments in Poland, offices in Warsaw, as well as Berlin residential. Aroundtown, CPI have about €10 billion worth of assets. Aroundtown is the largest German commercial real estate company, with also substantial residential part as well, and they have about €40 billion worth of assets. And with that, the next section goes from slides 19 onwards, goes through let's say more detailed financial highlights. Let's say effectively summarizing our financial results, but since we have also published our half-year report, as well as are all publicly available, I wasn't thinking of going through these in any detail. So, but I'm happy to answer any questions on these results that you may have. So with that, I think we're done with the introduction and the general overview on our part, and we're happy to answer questions.
Perfect. Just a quick reminder to all, if you want to ask a question, you can use the chat function, raise your hand, or email me directly, and I'll ask these. Maybe just to kick off, we talked very much specific about Globalworth. Can you maybe give us a sense of the current market dynamics in the major nodes that you operate in? You know, how do your vacancies look relative to the market? You know, what is the general supply demand, you know, kind of fundamentals at play in the markets you operate?
I made a brief comment on that at the beginning, but I'm happy to elaborate. So generally, vacancies have been rising. We have about in Warsaw, for example, market, we have about 10 to 11% vacancy. Bucharest is sort of reaching close to 15%. We are at or below market in most cases. I mean, in Poland, we also have a significant regional city exposure as well. It's a combination. The result of the vacancies is a combination of two factors. One is the decline in market effectively in leasing demand, as tenants are currently, let's say, on hold. Many of them in terms of making further decisions to extend or expand and the like, plus increased supply last year and this year, because no developer and no constructor stopped, basically left, let's say, sites abandoned. So basically everyone delivered their properties, which effectively increased the supply of the market. At the same time, a number of large, whether it's corporates, multinationals, or even financial institutions that had committed to substantial leases, they decided to put a part of their committed space onto the market via subleases. So there's a confluence of factors that basically have affected market dynamics, and that's why, as I said before, I believe that basically our operating performance, although of course we have shown a decline, has been pretty resilient in the face of quite challenging, let's say, market conditions. It's not all bad news in the sense that recently, and this is evidence also from our recent activity, we have seen a notable uptick in leasing demand, and we have also it's also evident that basically there's no new speculative office development. So so whoever was under construction or development, they have delivered or they are in the process of delivering their projects, but going forward, no one is just building speculatively. So if you look at maybe 18 months, 2 years ahead, we foresee a rebalancing of the supply-demand dynamics.
Maybe just sticking on the leasing side, we've got a few questions, but maybe we can just finish this up. Can you maybe discuss where you're seeing the incremental demand or leasing inquiries come from? You mentioned the uptick in leasing demand. Is that for new space? Is it consolidation? And also, are flexible leases becoming more commonplace?
Yeah, I think it's a little bit of distinction between the two markets. I mean, in Romania, it's still there's a lot of activity. So there is increased activity recently, but it's still focused on basically on within the market. No newcomers, no new entrants yet. So basically, is one tenant going from one building to the other. That's the bulk of the activity. Poland, which is a much bigger, much more dynamic market, is also benefiting from companies which have let's say operations in other parts of the world, like India or Philippines and the like. Again, which basically such locations having, let's say, suffered much more during the pandemic period, basically wanting to nearshore rather than offshore their activity. So we also see a little bit of demand there as well. I mean, there are also certain, let's say, sectors which are growing, like pharmaceuticals, for example, healthcare, all, let's say, the broader life sciences, call it sector. So in both markets, we have seen increased activity from particular industry segments as well.
And then maybe just to finish off Yusuf's question, are flexible leases becoming more commonplace?
Yes, sorry, yes, I forgot, yes. Yes, I mean, first of all, flexible leases, it is two things. One, whether we as a landlord, we offer as much flexibility as possible to tenants. The answer is yes, of course we do. Because we have a very large portfolio, and because our core business is not to develop and sell, but it's to buy or develop and keep. We don't have the pressure of basically, contracting, let's say, the standard, which is the 5-year term lease, so that basically we can create an institutional product for the next, core institutional investor to buy. So we're happy to extend for 1 year, 2 years, 3 years, or sign sort of shorter leases, or let's say leases with 5 years, but with with vacation flexibilities and the like. So this is the first thing, and the second thing, in terms of flexible space co-working, we have seen also an uptick in the actually increased demand for co-working spaces. Again, this has been a bit of a roller coaster over the last couple of years. Huge demand. 2-3 years ago, especially around the WeWork phenomenon. Then WeWork collapsed, and this sort of had an effect on the overall industry. Then the pandemic came. A global lockdown, and this basically this had a big impact on a number of operators because they could not cope and satisfy the lease obligations. But now, over the last several months, as a lot of companies, multinationals, and their employees want this flexible approach, co-working has also increased again in terms of popularity, and we have the benefit of having a number of co-working locations in our properties as well.
Another question on the leasing side of things from Mauro. Could you please comment on the level and direction of tenant incentives in your portfolio?
Yeah, very good question. In a nutshell, headline rents have remained more or less stable. Incentives have increased. There's no question about it. We have also reported on it. We're around 25 to 30% over the last over the first 6 months, meaning that basically the gap between the gross to net, or the headline to the net effective rent, is between 25 and 30%, which is basically increase from 15 to 20% from the previous periods.
I think it's important to mention here that in the past we had significantly outperformed the market, providing lower incentives to tenants, when the market was 30 to 35%, our average was about 20%. And now, even at the levels that Dimitris mentioned, we still, and that was at the 2019 levels. So even now at the higher incentives that we provided, we're still below the 2019 levels, and definitely the 2020, the post the COVID period incentives provided by many of our competitors.
Just going back up to one of the questions from Ridwan. What is the optimal liquidity position for Globalworth? Given the strong liquidity position, would you look at... Okay,
yeah,
perfect.
You can see it. Yeah, sure. Yeah, that's a good question as well. There's no optimal liquidity. I mean, one of the reasons we have held this this high cash position is because we have a bond maturing next year around 320 million euros. Just to also highlight that earlier this year we issued a green bond, which basically partially extended the maturity of the bonds ending next year, but we still have some 320 million euros outstanding for next year, and purposely we've kept this high cash position to be able to demonstrate mainly to bond investors and rating agencies that there is absolutely no risk of this bond being repaid, and this has actually helped us a lot in terms of maintaining our investment credit rating. So I think we're looking at various options and scenarios. Given that we're very disciplined in terms of our investment approach, for now the base case scenario is that we'll probably keep most of that cash for now and use it to repay the bonds next year. Having said that, if there is, if there are, very attractive investment opportunities along the line, for sure we'll use them. We'll use the cash to invest and refinance the bond in the capital markets.
Maybe we can touch on the question just below that from Yusuf. Has the shielding of CPIG impeded the group in any way for opportunities in Poland?
No, not at all. I mean, that's a good question. We're very careful, and we're very, of course, we're still separate companies. Again, as a reminder, CPI is not controlling Globalworth. It's a joint venture between CPI and Aroundtown, and the venture, and this is all again public information, is a strict 50-50 joint control type of joint venture. So there's not like CPI has more power over Aroundtown or the other way around. So whatever we do in Poland, we do it completely independently. Without any sort of interference from CPI.
And then maybe just touch on a question while you were chatting, given the increase in cases and fatalities as well, has there been discussion, from the regulatory side of the potential to, return to certain lockdown restrictions?
Not yet. Not yet. Listen, it's I think it will be very difficult to impose widespread lockdown measures that we saw last year and at the beginning of this year, because this will affect vaccinated people as well. I think for now the measures that are being implemented affect non-vaccinated people. So, in terms of entering, shops, restaurants, public spaces, and the like. Of course, who knows what can happen in the future, but my personal, let's say, feeling is that I see it very difficult to basically just apply, blanket lockdown measures, because this will be, it will defeat the whole purpose of people becoming going into the vaccine.
And then just on the land, was Tomatis going to say something?
No.
Okay. And just with regards to the land bank, is a lot of that opportunity primarily linked to office opportunities, or is there also?
No, it's mostly. We do have certain office land plots, or certain land plots destined for offices, but 90% plus of our land bank is logistics related. mainly concentrated around effectively one location, which is the Romanian port of Constanța on the Black Sea, which is a very strategic location. Of course, a very long-term project. It's about 1 million square meters to be developed over the course of the next 5 to 10 years. It's a very long-term, but it's a very strategic project for us and for the Romanian logistics market as well.
I've got a question from Mauro at the bottom. Could you please provide more detail on why you sold 5 of your Warsaw office buildings?
Yes, sure. The reason is the main reason is because there are 2 key reasons. One is that this portfolio is split between 4 small assets which were fully leased, yes, but they are multi-let and they require a lot of asset management efforts for not so much meaningful contribution in terms of value and NOI. And then the 5th building, the so-called Varta Tower, which is about a 35,000 square meter building GLA, will become vacant next month. The main tenant, Varta Insurance, this is something we knew some 2 years ago. At the end of the lease next month, we're located to a new building. Varta Tower is a very nice but rather old tower in a good location, in a very good location actually, in the city center of Warsaw. So we took the decision that given current market dynamics, rather than adding another 30,000 square meters, 35,000 square meters of vacancy in our portfolio, we decided to bundle this tower together with the 4 small assets, so that basically we make the package a little bit more attractive to the investor and sell it off. I mean, it's important to highlight that basically we sold these assets at a premium to our valuation. Just also to point out that if we're to keep the Varta Tower, which is 35,000 square meters, would probably need to spend another 20 million euros in terms of capex to refurbish and reposition the asset. Again, coupled with the uncertainty of attracting new tenants in a very competitive market.
Maybe just a question from me. I was looking at the presentation of the weekend. The fair value adjustment seemed like it's moderated from last year for interim. But is that a net number which includes the standing portfolio as well as upside on the developments? If we had to split that out, what does it look like on the standing portfolio, or is it also quite a small number?
Let me see if I have that. I don't have that number in hand, but maybe Stamatis has it.
I mean, overall, the portfolio, the standing portfolio revaluation was overall our portfolio remained in terms of value flat. So during this period we only delivered 1 tower, and effectively that was, if I'm not mistaken, like 10-15 million was the uplift from developments.
And you mentioned something about capex on the Varta Tower being 20 million euros. With the current policy of retaining or having to distribute 90% of EPRA earnings, is that 10% enough to continue your capex requirements or holding LTVs?
Yeah, I mean, we shouldn't confuse earnings with cash. It's different things. But overall, yes. Overall, yes. We don't have many properties like that. We don't have that many properties that require so substantial capex going forward. So overall, yes.
And looking at the V that you mentioned, it's worth mentioning that since the COVID pandemic outbreak, valuations of properties have been 10 to 50 basis points yields have been tend to be 50 basis points wider than they were previously in place, let's say in 2019 year end. So as we return to more normality and there's more transactions in the market, we believe there's also, we expect an uplift from that front as well, impacting RV.
And then just maybe a final question from me. I'm just looking at specifically the EPRA earnings, quite a sort of a run rate, from pre-COVID to now. And I'm just looking at, I think it was FY19 was 44 cents, FY18 was 46 cents. Can you maybe just, provide us, some reasons or rationale for the reduction in EPRA earnings, from then to now? It seems like one part was the liquidity drawdown and the excess cash. So there's higher debt cost, coming through. But overall, you said there was sort of not much impact on top line. So maybe just trying to reconcile.
First two halves, the first half of 2020, the first half of 2021, we had a 9.5% drop in NOI. So this is a major contributor to the decline in EPRA earnings as well.
All right.
But if you want, we can provide separately, a more, let's say, a more detailed analysis of the factors that basically led to the decline. But it's a combination of between last year and this year, combination of drop in NOI, and yes, as you mentioned, increased also financing costs as well, because we issued also a new bond and the like. So.
Okay, that's it from me. I don't see any more questions from the participants. Maybe let's give them one chance. If there are any more questions, could you please raise your hand or type one in the chat box. But other than that, Dimitri, maybe some concluding remarks from your side before we close the meeting.
No, on our side, listen, we continue to be very much focused on managing, our portfolio, extracting, as much value as possible. We are so it's much more of a portfolio asset management type of focus and work that we have. We continue, of course, as I said before, we continue to monitor the market for investment opportunities. It's not easy in the sense that there is so much liquidity in the system that overall, yields, cap rates have remained largely unaffected, and they're still quite low. So there was a period, maybe early middle of last year, where you saw some, especially in Poland, some an increase, maybe 25 basis points, something like that. But overall, we haven't seen meaningful movement in yield in yields and cap rates, and nor any signs of real stress or distress in the market, which something which have been we had capitalized in the past. We'll continue to invest and expand in our logistics business, which is very, very promising. And basically that's it. And I do believe that with increased vaccination rates, people will come back to the offices more. And this will basically, lead to more firm tenant demand. I think we still have another probably, 9-12 months of a bit of a bumpy road ahead. But I continue to remain optimistic about the future, and I have absolutely no doubts for the long-term viability and sustainability of the office model, especially in our case where we have a very good, a very high quality portfolio. When you have very good assets in the right locations, there will always be list.
Perfect. Just trying to find the mute button. All right. Thank you so much, Dimitri, and thank you all for joining.
Thank you, everyone. Thank you for your time. Thank you. Enjoy the rest of your day. Thank you.
Thank you.